Congressman French Hill of Arkansas's 2nd District, now the chair of the House Financial Services Committee. Thank you for being with us this morning. Congratulations on your appointment to the House Financial Services Committee.
Thanks, Karen. Great to be with you. Thanks for the invitation.
Yes, sure. Tell us, if you would, a short version of this new legislation you're introducing to overturn the Consumer Financial Protection Bureau's bank overdraft rule. Tell us a little bit about it in TV terms.
You bet. Well, right after the election, Tim Scott, who's the chairman of the Senate Banking Committee, and I wrote all the bank regulators in the Biden administration and told them not to issue any more rules at the end of the administration. The election was over. We're turning the page. We're going to have the Trump administration coming in. But the Consumer Financial Protection Bureau, the CFPB, absolutely did not listen to our direction, and they issued a number of what are called midnight rules, rules issued right at the end of an administration. And one of them, I think, hurts consumers by capping overdraft fees to $5. And it sounds good, but what the result is that it's going to have some banks eliminate overdraft protection programs. That hurts the families that need them the most. You know, before I was in Congress, I was a community banker, Karen, and we had banks in southeast Arkansas, in the Mississippi Delta, and Ashley and Chico County, and I know how desperately needed overdraft protection is for families going from paycheck to paycheck. They don't want to have to miss a higher penalty credit card payment or a utility payment or a mortgage payment, and they use easy to access overdraft protection programs on their checking account to do that. I think this rule hurts that, and I think it's federal price regulation, and it's unnecessary.
What specific concerns led you to introduce this legislation after this sort of last-minute action by the CFPB? And where is it at I'm assuming in the early stages of progressing?
Right. Well, first, we introduced it because I think the rule goes beyond the statutory authority of the CFPB. That's number one. Okay. Number two, it's federal price regulation. And we know that federal price regulation doesn't help consumers or help inflation. For example, if you put on rent controls like they have in the Northeast and like Kamala Harris campaigned on, what that means is you'll get less housing units, not more housing units, and you'll have landlords not take care of their apartments because they don't get the return that they should that's necessary for both investment and reinvestment in the apartment unit. So price controls don't work. So that's the second reason. And the third reason is that consumers will be hurt. You'll have less oversight protection programs offered to consumers if you cap a fee like this. We should let competition between financial institutions, credit unions, and other financial providers create solid, good overdraft type programs that help consumers between paychecks. And that's what I think the best outcome should be.
Well, I'm curious, what is the guarantee that they would do that?
Well, competition. We have two of the biggest banks in the country, Citibank and Capital One Bank, don't even charge for overdraft protection.
True.
So there's tremendous competition out there. And you've got some credit unions that don't do that. And you have banks that have very low fees now. This is a convenience, and it's an affordable way to have access between paychecks to a little extra cash at a much lower cost than taking out a high dollar loan or miss a payment for a utility or mortgage or credit card that produces much higher fees and much higher interest rates. So my judgment from all my years in consumer banking and community banking here in Arkansas is consumers are very smart. They know how to manage their money very effectively, and competition gives them more choices, and that's what we ought to be promoting, not federal price controls.
I understand this would apply to banks with more than $10 billion in assets. If that is true, if I'm correct, then how might smaller, say, community banks in Arkansas be impacted?
They won't be directly impacted by this rule, and they already have vigorous competition in these in towns for where you have banks that are under 10 billion. So they're not impacted by this rule, but the premise still stands that you have the federal government trying to regulate prices among private businesses in an area that already has lots of disclosure, lots of competition, lots of choice. And I think it was I think it was a midnight rulemaking also that went beyond the statutory authority and the statutory process of the Consumer Financial Protection Bureau.
There are sources, organizations perhaps like the National Consumer Law Center, if you consider that a reliable source, that estimate overturning the rule could cost Americans already facing inflation and higher prices up to $225 a year. What's your response to that?
My response is that these fees are coming down. They're coming down through competition. They don't need federal price regulation. And there's a lot of consumer choice, as I just indicated, that you can go have a banking relationship at an institution that doesn't charge overdraft fees or has a better checking account or has better optionality in other ways. And that federal price regulation just results in less overdraft protection for the neediest families, because there'll be banks that say, if I can't charge a reasonable return for this service, for this convenience, then I won't offer it, or I'll raise prices somewhere else. So this is just, in my view, the results when you get the federal government trying to be a price regulator. It doesn't work. It doesn't work in pharmacy. It doesn't work in other aspects of it. And one of the strengths of our economic system is stark competition across all financial services and other products, and so that the person with the best product at the lowest price wins. And that's how Walmart built their entire business, for example.
Capitalism, yes, it does work. You mentioned the need perhaps for guardrails on the CFPB's enforcement in this rulemaking powers, especially concerning this midnight rulemaking. Would you elaborate over specific overreaches you've identified other than those you've mentioned, and any reforms you think are necessary?
Well, the CFPB, the Consumer Financial Protection Bureau, was created by Elizabeth Warren, who's now a senator from Massachusetts. She created it in 2009 and was part of the Dodd-Frank Banking Reform Act. It created this consumer protection agency, but the consumers were already protected. All the rules that are enforced by the CFPB were previously enforced by all the bank regulators and the Federal Trade Commission across our economy. It was already being done. Now it's being done twice. You have the banks being regulated by their own regulator for consumer compliance, and if you're over $10 billion and you're in banking, you get another examination from the CFPB. So what we'd like to do is make sure that there's oversight of this agency. It's not on congressional appropriations. It's funded through a slush fund at the Federal Reserve. We would like the CFPB to be an independent agency that has funding from Congress, voted on every year, and a bipartisan commission that oversees its work, not one single director. And that's how Elizabeth Warren set it up. So many in Washington believe that the CFPB is the least accountable federal agency to the people's elected representatives in the whole government. And that's why we want to make those changes this year.
Well, that makes sense. Your argument absolutely makes sense. Tell me, if you would, on the I had a question I wanted to get to about what is next. I know you just announced your legislation maybe a week or so ago. What is next? What is the time frame it would take for this to move through and eventually pass?
Well, these congressional review acts, which are the Republican House and the Republican Senate moving legislation to change Biden regulations, I think you'll see those move through the House and Senate over the next 2 months. Also, the priorities we have in our committee are helping community banking be competitive. We want to look at the regulatory burden for our small community banks in Arkansas, make sure that they can compete, make sure they can raise capital and serve their customers. That's a priority for the committee. And we also plan on regulating crypto. We're going to move the regulatory framework bill that passed last year in the House to regulate cryptocurrencies and digital assets and create dollar-backed stablecoin to be used in blockchain operating systems. Those are two big financial services improvements that we're going to tackle this year. So those are some of the priorities we have before the committee this spring.
Well, thank you, Congressman Hill, for your time. We so appreciate this morning being able to talk to you and hope to see you again after the outcome of this legislation.
Good, Karen. Thanks for the time.